Hello everyone, this is Khoo Swee Yong. This is the first time I'm presenting as the Chief Investment Officer of CASA Singapore. We have a mission to make the world's assets investments accessible to everyone. I will speak a little bit more about this later. We've all had a very busy weekend last weekend because the Finance Minister announced a package of budget with many new or amended taxes for budget 2022. So I will be giving today a little bit of an update about the residential market, just bringing you up to date about the latest quarter data, which is actually the whole of 2021, full year 2021 data. And then after that, a bit about what I'm concerned with in terms of the Singapore market for the next 10 years. And then I will introduce to you what I've been busy with in the last few months, which is after I've joined CASA in November last year, the new trend in real estate investment, which is the tokenization, fractionalization of large assets such that it can be invested by more people, accessible to more people. And then we finish off with, so how will the budget impact all of us who are interested or who already own real estate? Okay. So first off, let's talk about update of the recent market movements. Rents have gone up in the last 2 years. This is despite the fact that we are still in the middle of COVID. In fact, some restrictions started exactly 24 months ago in February 2020. And if you recall, Singapore had a lockdown that started from April 2020. But throughout this period, except for what happened in the first 3 to 4 months of the COVID-19 event, the property market has been hot. So rents have already gone up by more than 10% in the last 7 quarters. And this is despite an overall population decline of 250,000, with included in it is a decline of 63,000 employment pass holders and S pass holders. And these are people who are renting our private residential properties. And yet we could see a more than 10% increase in rent. So I have been wrong in the last 1 to 2 years in terms of forecasting that the market would be weak. Strangely, despite losing 250,000 in terms of the overall total population, as well as losing some relatively high income earners in terms of the employment pass holders, as well as the S pass holders, we have got demand for rents that's pushing up private residential rentals. In fact, even though this chart is showing the index for private residential properties, the HDB rents have also gone up, although HDB itself does not produce a chart about average or median rentals in index form. So both HDB rents as well as private property rents, they've all gone up in the last 7, 8 quarters. And that's despite a population decline, with a decline of relatively high income earners in the employment passes and S pass groups. Well, so not surprisingly then, I also got my forecast wrong on the private residential prices in the last 2 years. They have gone up by about 15% in the last 24 months, with only a tiny blip happening during the circuit breaker period, with restricted viewings. We in the property agent industry, we've got to conform with all the social distancing as well as the restrictions on number of visitors per day. But yet demand remains strong and property price index went up, which was what led to the Ministry of Finance as well as Ministry for National Development to implement additional cooling measures in the middle of December 2021, and that sort of took a little bit of air out of the balloon, or some might say the air out of a potential bubble. But again, this was something that was difficult to forecast, that the prices would go up by so much, that the demand would be so strong, because wages are not back to 2019 levels. This chart from Ministry of Manpower shows that in the last 2 years, this is the median gross monthly income from work, including employer CPF, for full-time resident degree holders. And these are people who are generally classified as the PMETs, the professionals, managers, engineers, and tech people. And you have got 2 years of declining median wages. You have got jobs that are lost, and we are not back to the 2019 levels of employment, of bonus, for example. Just if you were to look around, maybe you could just ask some of your friends in the airlines industry, aerospace, tourism industries. Wages are certainly not back up to what they used to be earning in the past. So how then did we suddenly have this demand that is so strong that people are willing to pay above 2019 property price valuations and continue to push up the index until it is a 15% increase over the last 2 years, such that the government had to step in? So this is, I would say, something that is difficult to forecast, and therefore looking forward, I would only probably highlight a much longer term trend that is unfolding as we speak, and that's our demographic trends. This is a population chart that is sort of a population tree that is put on its side. A normal population tree is usually vertical with babies, the baby cohorts at the bottom, and then the older people at the top. But in this case, we've combined the male and female resident populations of Singapore and put them on the side. And so on the left-hand side, the bars show the babies and infants 0 to 4 years old. The next bar in orange would show 5 to 9 years old. So each bar is a 5-year cohort. And of course, our most senior citizens on the right-hand side, 90 years and above. You can see that starting from the year 2020, this group that is considered the baby boomers, who are at 64 years old in the year 2020, crossing over to 2021, they would be celebrating their 65th birthday. This is the group that would be getting their CPF payouts. And they are, of course, with a mind of planning for their retirement. Some may have already been retired from their full-time jobs. Some are in the midst of still renewing their annual contracts to stay on in employment. But look at the size of this cohort versus the previous cohort. Previous cohort who are today, they are 67 to 71 years old. But this cohort here, they are at about 230,000 people within a 5 age band cohort, right? This cohort here that's celebrating their 65th birthday last year, this year, up until 2025, they are 280,000 strong. And this very strong high numbers will remain with us for the next 40 years. There are 8 orange bars across to the Gen X and the Gen Y, where each of these 5-year cohorts are more than 250,000 strong, meaning each year there will be 50,000 people celebrating their 65th birthday and moving into retirement. And what concerns me then is, as they move into retirement, the income slow or reduces, and then they are thinking about whether to downsize or not. As for the people who have moved past way beyond retirement into their 80s, and then they start to pass on, they would then, their properties would then be willed down or transferred down to their children who are either baby boomers or the children who are in Gen X. And these properties are probably going to be sold in the resale market to younger people, either in the Gen Y group or the Gen Z group. So over the next 10 to 20 years, as the total number of deaths in Singapore exceed the number of births, probably around the year 2030, we would see a lot more of this wealth transfer of real estate to the next generation. But because the next generation, we are a country of 90% homeowners, the next generation would probably be owning their own properties already. They would then sell the parent, the second of the parents who have passed away. They'll sell the property and cash it, and then they'll divide up the cash. Now, then how many people are in the market to buy? Look at the Gen Y column that says 30 to 34 years old, the orange bar, and the one that says 35 to 39 years old. These are very large cohorts of close to 300,000 per 5-year age cohort, right? In the last 10 years, these Gen Y families have been in the market to buy up the 200,000 HDB flats that were launched for BTO since the year 2012. About 200,000 HDB flats were launched between 2012 to 2021. Many of them have already bought their properties. Those who are in the market to buy today are mainly those who are in the 25 to 29 year cohort, as well as those who are in the 20 to 24 year cohort. And then you can see that these cohorts drop off, the population size drops off pretty fast. And therefore, 10 years from today, the people who are buying would be the Gen Z population. And this Gen Z group would be, there will be even fewer of them. And so, of course, we could see that perhaps number of BTOs launched in the market might be reduced, but there would be a lot more resale properties coming out to the market, arising from the passing away of people in the silent gen group or in the baby boomer group 10 to 20 years from today. And there wouldn't be many people in the Gen Z cohort that would be in the market to buy new properties, as well as the increased supply of the resale properties. So because the market in the last 2 years have been a little bit murky, I've gotten my forecast wrong. Right now, if you ask me to forecast what might happen in the next 2 years, as we pull out of the pandemic, property prices could remain strong because there's still some delays in the construction. However, the longer term trend of the aging demographics, as well as the passing away of the silent gen and the baby boomers, the number of young people in Gen Z who are still looking for properties, there'll be some form of an imbalance. And so perhaps looking towards the year 2030, the weakness might become a little bit more obvious. By weakness, I would mean a bit more supply than usual in the second-hand market, and a much reduced demand because the Gen Z who would be 30 years old then, there will be fewer of them. So that's one of my concerns about the Singapore property market now. And in fact, in the past 2 years, me and my colleagues have been a little bit more busy advising the older families about their wealth transfer, including their real estate. How should they transfer to their loved ones, their beneficiaries? I have described a lot of these in detail in the chapter 1 of my book, The Future of Real Estate. Those who would like to order the book, please visit the Shopee site or click on the link. The next item that I want to talk about is I need to update all of you about my joining of CASA since November last year. This is going to be a new trend in real estate investments, which is the tokenization of buildings, fractionalizing them such that it is more accessible to a wider investor pool around the world. So very simple business model. On the left hand side, real estate, we get them structured in a legal investment structure. We get them listed sort of IPO onto the CASA platform, and then we issue them as tokens such that investors can buy these tokens, and these tokens are digital asset-backed securities. And the investors can subsequently then trade these tokens amongst themselves. So there's the IPO process, just like in the stock market. The company issues the shares for the first time, and subsequent to the issuance, investors can have secondary trading on the stock exchange. So that's a simple business model. We have just received our license on capital market services license last year, as well as the recognized market operator. So meaning we can do the full suite of service from listing an IPO of the building onto our platform, and then our platform, having the recognized market operator status, would be able to allow the owners, the investors of these tokens to trade the tokens amongst themselves. Chief Executive Officer license holder is Mr. Galen Tan. Mr. Galen Tan has been a private banker for about 30 years of his life. Our COO, Mr. Lee Hang Do, is also been a banker after his stint in PwC as an auditor. I joined as the Chief Investment Officer and brought in to the group my real estate experience. And then Kok Yong, our Chief Business Officer, he was a graduate of the real estate school in NUS, and then started his working career in URA, and subsequently also became a real estate analyst with Merrill Lynch, as well as with the private equity investment fund. So between the four of us in the Singapore management team, we probably have about 50 to 60 years of banking experience, as well as about 30 years of real estate experience. These are our key shareholders. CASA itself was originated from Korea. So our renowned shareholders, Kakao Ventures, one of the largest digital banks in Korea. We've got Korean Development Bank. We've also got the Hana Bank, for example. It was founded in Seoul in 2018, and then it took us about 1.5 to 2 years to build the application. We raised funds, and then in November 2020, the first small building in Gangnam in Seoul was listed on the exchange in the mobile phone app in Korea, open for subscription. And in 8 days, we managed to sell the entire building in tokens that were fractionalized down to each token about $5 or 5,000 Korean won. Subsequently, in July last year, a second building, a part of the building, a strata floor of this building, again in Gangnam, was listed and was fully subscribed very quickly, and the investors started to trade immediately on the day that the subscriptions were closed out and the tokens issued. And then later part of last year in September, when we received the license in Singapore, we also in Korea, our colleagues launched the third office investment product, which is again a floor of this Yoksam Technology Center in Gangnam as well. So it is business that is already running in Korea. Right now, we are building up our platform in Singapore, and we would be ready to invite investors to sign up and look at the products we have, starting from maybe within the next 2 to 3 months. These are some screenshot images of the mobile application that we have in the Korean system. Subscription for IPO on the top, and then once the IPO is fully subscribed, um, and the tokens are issued, then you can list your tokens for trading at the price that you want to sell the token at, or at the price that you want to buy the token from somebody else. The investment structure is a REIT-like structure. You have got an asset. The asset is put into a special purpose vehicle, such as what the REITs do for their buildings. And then there are third-party trustees, custodians who would be making sure that the list of owners and investors are tagged neatly, accounted for against the ownership of the building through the special purpose vehicle. The investors then trade these tokens on the CASA platform. All this built on our proprietary blockchain-based system, so that it is efficient, so that the cost of transactions are minimized. Some of the examples of investments that we are looking at now in order to get ourselves ready for launch for investors to put in their investments. For example, petrol kiosks in Australia, for example, industrial buildings, or buildings such as nursing homes in Japan, where the lease will still be running for another 10, 20, in this case it is a 30-year lease building. Not that the building is on a 30-year lease, so the building will be on a freehold ownership basis, but the operator has signed 30 years of lease to operate the asset as a nursing home. And some of the other more mainstream products would be like office buildings or retail malls in Japan, Australia, perhaps Singapore. Okay, so this is probably what most people are looking for. How would the budget affect me? So really, what about budget 2022? Of course, the minister has given a lot of details and explained many of the changes, why they are needed. I will just be focusing on which parts of the budget will affect us in the property market. So GST increase, the happiness in amongst the public would be that the GST increase is not a one step jump of 2%, and that is not happening in the year 2022. Some of the people quoted in the newspapers, they were expecting that GST increase would start from third quarter this year, but the minister has kindly pushed that back, and then he has staggered it to 8% in 2023 January, and then in January 2024 9%. But the impact will be that today we are already in a pretty inflationary sort of environment, supply chain issues, shortage of productive workers. There is still a control of movement of the labor force, and at the same time, globally, interest rates are pushing up and rising. And so the GST increase to 8% early next year will really add to the cost of property ownership. And the fact that inflation is also playing with higher cost of construction material, higher cost of, say, your landscape services providers in the condominium. So you add that on to the increase in GST, you can bet that your MCST bills, your maintenance fees for your condominium the cleaning of the swimming pool, the changes and the upgrades and repairs to your lifts, as well as the facade of the buildings or repainting costs. All these maintenance fees would go up. So expect maintenance bill as well as in fact including sinking funds to also go up, because your MC now has to also pay higher price for the cost, to take into account the cost of inflation, as well as to account for a higher GST payment. So for if you happen to own retail shop, you happen to own a small industrial property, remember that your tenants are also facing these increased bills. Increases due to inflation and interest rates, increases due to the GST. So business costs for your tenants have also gone up. And on top of that, if you are owning your retail shop through a GST registered company, you would have to invoice them additional rental because of that GST increase as well. So overall, even though for many players the GST might be a pass-through, but it is not a case of just passing through a 1% increase in the GST or 2% increase in 2024, because, for example, if your tenant happens to be a hairdressing salon, they will be looking at the increased cost of their materials, increased cost of supplies, increased payment on rentals because of GST. They will probably a normal haircut that is $25, the hairdresser might push it up to $27, $28. And that's an increase of another 3%, an increase of another 10% on the cost of their goods being sold to you, goods and services. So the increase of 2% in GST, together with inflation, interest costs on bank loans, all these things could push up overall expenses up by 10 to 20%, depending on what sort of business and which part along the chain we are at. And I have not even included here the fact that some of us may be employing workers who are holding S passes or EPs, and since the minimum wage qualification level has been pushed up, that we would also be having to bear a higher human resource expenses. So the GST increase to 8 and 9% will also impact the purchase of commercial, industrial, or even shophouse properties, because if the seller selling the shophouse to you is a GST registered company and you bought the shophouse from him in 2024, you would then have to pay 9% of your purchase price in the form of GST to buy the shophouse from him. So these increased costs overall would add to reducing your net rental returns or your net yield. Even though commercial industrial properties do not come with ABSD, they are not impacted directly by the cooling measures, the GST for commercial industrial properties necessarily means that there is some cooling and dampening effect on these property segments. So then what happened last Friday? Minister announced property tax moving up to higher levels in 2023. Again, he staggered it and further up in 2024. For owner-occupied homes, including HDB flats, it's only about 10% of owner-occupied homes. There are about 1.1 million HDB flats now, and there are about 400,000 private residential units. So out of the 1.5 million homes in Singapore, only about 10% that are owner-occupied will be impacted by the increase in property taxes. But for those that are rental flats or non-owner occupied units, or it could be your second home, a second home that is registered under your name, say you are living in around Grange Road in Singapore, but you have got a second home in Sentosa Cove, and you use it for weekends where you go for snorkeling and diving, for example. That second home would have a higher property tax, and that 100% of the non-owner occupied properties are affected. So owner occupied homes, generally we estimate, as a licensed property broker, I would estimate annual value to be about 6 to 8 months of market rental of that property, whether it's an apartment or a house. And for owner occupied homes, the annual value of above 30,000, that part has increased. Today's property tax for owner occupied homes is 0% for the first $8,000, and then for the next $47,000, so bringing it up to a total of $55,000, then that next $47,000 you would apply a 4% tax. In the new tax that's effective next year and then increasing for the following year, it is the first 8% at zero, the first 8,000 at 0%, and the next 22,000 at 4%. So these two summed up is 30,000, and subsequently $30,001 onwards, it is 5% next year, and then it is taxed at 6% the following year. And then the numbers jump pretty quickly, such that from 1st of January 2024, at above $100,000 annual value, which applies to most of the bungalows, applies to the larger size apartments in District 9, 10, 11, it is 32% of tax for, and it is staggered up. So IRAS produced a table that summarizes the tax increases with a few examples. So a $10,000 per year annual value HDB flat, property tax, no change. A 30,000 annual value, a suburban private property condominium, a suburban terrace house, for example, where the rentals per month might be about $4,000, and so the annual value, if you multiply by 6 times, that's 24,000, annual value of 24,000. Property tax, no change. But a condominium in a more central location, some of the condominiums in the RCR, rest of central region, as well as the CCR, core central region, together with landed properties that are perhaps District 15, 16, some in District 19, District 21, these properties would have an increase. Owner-occupied homes increase $200 in the year 2024, increased by $100 in 2023. For the larger landed properties, as well as D9, 10, 11 condominiums that are, say, 2.5, 2 plus study and 3 bedrooms and larger, where the monthly rents may be from around $8,000 to $9,000 upwards, these properties would all be paying a higher owner-occupied property tax rate. And of course, for the good class bungalows, as well as the bungalows and maybe penthouses or the 4 and 5 bedroom units around Orchard Road, River Valley, these ones that are above 150,000 annual value, so perhaps monthly rents of $18,000, $16,000, that these properties would pay a significantly higher owner-occupied property tax rate. What about those that are for investments? For non-owner-occupied residential properties, it applies from second home under a person's name. Every tier has gone up. So for the first 30,000, it is 11%, and then 12% in 1st January 2024. But what goes up a lot then is anything above 60,000 jumps up to 36%. So the net rental yield is going to be quite a bit lower. So you can estimate that if you own a property that is pretty upper end, say the property is about 10 million Sing dollars of value with monthly rental that is above 15,000, annual value of say 150,000 upwards, you would be probably paying an additional month of rent on top of your current property tax. And so that is going to be eating up quite a lot of your rental yield. As it is now, rental net yield after taking away interest expense, maintenance fees, and property tax, residential property yields are less than 2% on a net yield basis. With this additional property tax to be paid on your rental units, you are going to be probably at about 1% of net rental yield. And that 1% probably can contribute towards your principal repayment. So the table here shows, you can freeze and pause this video and look at the numbers for the properties that you own that are being rented out. If you own something, say at River Valley Road, where your monthly rental is about $6,000, so you will be falling around this band of about 40,000, and so you'll be having an increase of 1,400. So that's about a quarter month of rental. Okay. So what else about budget 2022? There's been a lot of talk that says that this is probably like a Robin Hood budget where the rich people are taxed a little bit more, because the increases in the property tax actually only affects the higher end properties, the more luxury class properties. And on top of that, there was a luxury car ARF, the additional registration fee, that applies to the top, maybe a Mercedes-Benz S-Class 500, maybe a Lamborghini, a Porsche. Doesn't affect the rest of the cars most of the cars in Singapore. So some people call it a Robin Hood budget, they call it a wealth tax. Actually, these property taxes and luxury car taxes are not exactly wealth taxes. I wouldn't say that ABSD, additional buyer stamp duty, that is applied to, well, it is heaviest on the most expensive properties, of course, and it is very heavy for the rich families and the foreigners who are coming in to buy properties to be paying 30% additional buyer stamp duty. But are these really considered wealth taxes? Because even a ultra rich family coming in to buy a Pasir Ris apartment would be paying ABSD, and the Pasir Ris apartment is a mass market apartment that is not really targeted at being sold to the wealthy, right? So I wouldn't call them wealth tax, but I think that we should start getting used to this phrase wealth tax, because what I would consider wealth tax would be annual wealth tax that's applied to a wealthy individual or wealthy family's total assets, including non-residential properties, because they may own office buildings, they may own factories, they may own industrial properties. It would also include their financial assets, their ownership of their businesses. It may include their yachts and private jets. This is what I would determine as what I would classify as a wealth tax, that you're taxing somebody's overall total assets every year. Wealth tax could also be implemented as a once-off if we consider inheritance tax and estate duties. And right now our inheritance tax is 0%. And as we could see from the aging demographics graph, that the number of deaths will be increasing a lot in the next 10 years. We might in fact see inheritance tax being implemented, and that I would consider to be a wealth tax. Those would be low-hanging fruits for the tax authorities to bring in additional revenue for the state budget every year. So what should you do given all this new information about the new taxes, and recently, of course, ABSD, and then just now what I presented to you about the aging population and how the Gen Z and the younger cohorts of Singaporeans and Singapore PRs, there are not enough of them to inherit all our properties. Given all this information put together, plus last weekend's budget, what would you do? Understand what is the financial impact on you for the next 2 years, because the taxes are going to be staggered. The GST, understand how it would impact you as well as your tenants. The residential property tax, understand how it might impact you. Of course, there are many people who also say that, hey, since my property tax has gone up, I'm going to ask my tenant to pay a higher rent. Yes, that is possible, provided the rental market remains as tight as it is. In fact, before COVID hit in 2018 and 2019, the rental market was really trying to find its feet, and we had close to 30,000 private residential units at that time that were vacant. Today we are down to closer to 20,000 units that are vacant. So the market has tightened up and it has become a landlord's market. In the meantime, you might be able to raise your rental a little bit on your tenant to try to cover for your property tax expenses. But when the world goes back to a bit more normal, and we consider the virus to be endemic, then the rental situation might revert back to a sort of an oversupply situation in the year 2019. Then when rentals are weak, the bargaining power is with the tenants, not the landlords. So think about your budgets. And of course, if you own a rental property, the MCST might in its next round of budgeting for the next 3 years of expenses, especially if you are hitting the 5-year mark for your condos, upgrading and renovations and repainting, then expect that there could be additional expenses relating to property ownership, not just under property tax, but due to inflation as well as GST increase. Better still, speak with your financial advisors. This video was done, in fact, together with my friend Simon Chan from Phillips Capital Financial Advisors. Let your financial advisors also help you to reassess your budget and understand the financial impact, and perhaps review whether you want to also relook at your home loans and whether you need a mortgage insurance as well as home insurance. And for those of you who are still considering deploying your money into real estate, other than GST concerns, do take note of COVID-induced habits which might become permanent, such as the work from home trend. If you are buying into a residential property, the work from home trend actually is not positive for some of the tight shoebox units, because 400 over square feet studio apartment, if more and more people are going to be working from home, I'm on Zoom now, my neighbor is also on Zoom, and so there may be disturbance between housing units as well. So take all these things into consideration. And then be mindful about the aging population and the massive wealth transfers that would be coming up in the next 10, 15 years. And this is not a case that is just unique to Singapore. There's across Asia, there will be trillions and trillions of wealth transfer by the year 2030 amongst the wealthy as well as the more developed cities that are facing the same aging demographics issues. And then for those of us who have got a few more properties and who have got solid portfolio of financial assets, do consider the what if scenario, that if a wealth tax were to be implemented, say it were a wealth tax on anybody with total asset value of above $10 million, and it becomes an annual wealth tax, then would you want to start your wealth transfer process to distribute some of your wealth to your loved ones ahead of time? So give me a thinker. There are financial advisors that I work with. Together with me, we help you plan your real estate as well as your financial portfolio, to give you a more balanced uh, sense of what you might do for the next 5 to 10 years. Thank you very much. I hope you have enjoyed this, and I look forward to your support, especially when Casa Singapore is ready to launch. Please follow me on my Telegram channel for property market updates. And those of you who have got any questions, drop me a WhatsApp or send me an email. And I look forward to your support, especially when the Casa platform is ready for you to come in to subscribe to real estate products around the world. Thank you.